Welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on key updates regarding pivotal economic trends and financial shifts. Welcome back. We start off with the United States, where the government has announced that it's finalizing regulations to restrict American investments in certain technology sectors in China that may pose threat to national security. Proposed by Treasury in June and stemming from President Biden's August 2023 executive order, these rules target semiconductors, quantum information technologies, and special AI systems. The regulations will take effect on January 2nd and will be managed by the newly established Office of Global Transactions within the Treasury, with a focus on protecting next-gen military, cybersecurity, and intelligence technologies. At a rally in Atlanta, Georgia, Republican candidate Donald Trump highlighted Elon Musk's potential role in his administration if he wins the presidency. Trump praised Musk's ability to cut costs and improve living standards, claiming that Musk's vision could potentially save $3 trillion. Trump also reaffirmed his commitment to trade reform through the proposed Trump Reciprocal Trade Act, which would impose equal tariffs on countries like China that charge high tariffs on U.S. goods. He asserted that this approach would benefit American workers and industries.
Not me. We will end inflation. We will stop the invasion of criminals coming into our country, and we will.
Moreover, U.S. President Joe Biden has announced a $3 billion investment from his Inflation Reduction Act to improve the country's port infrastructure. The White House said in a statement that this investment includes $147 million in awards for the Maryland Ports Administration. The statement added that the investment will be used to create union jobs and upgrade port infrastructure. Moving to Asia, data from the China Federation of Logistics and Purchasing showed that China's logistics sector grew in the first 3 quarters of 2024. The federation stated that the country's social logistics rose 5.6% year-on-year to 258.2 trillion yuan. Strong demand in the industrial sector was driven by a package of supportive policies, with over 92% of industrial logistics experiencing year-on-year growth. The high-tech manufacturing sector also maintained a 9.1% growth rate, with logistics for intelligent drones and smart vehicle equipment exceeding 30%. Japan's government data showed that unemployment rate in September fell to 2.4% from 2.5% in August, improving for the second straight month. The Ministry of Internal Affairs and Communications said that the total number of people with jobs declined 0.1% to a seasonally adjusted 67.82 million after rising in August. The number of unemployed people dropped 2.3% to 1.68 million, decreasing for the second consecutive month. The Japanese government has maintained its assessment that the economy is recovering moderately, while emphasizing the need to remain vigilant about potential global economic risks and financial market volatility. In its October report, the Cabinet Office noted continued recovery, supported by improving employment and income, maintaining its outlook for the third consecutive month. However, it highlighted downside risks, including rising interest rates in the U.S. and Europe, stagnation in China's real estate market, Middle East conflicts, and domestic inflation. In Europe, Ulrich Kammer, the European head of the International Monetary Fund, has stated that Germany requires both structural reforms and increased investment in public infrastructure to address its recession. Kammer emphasized the importance of functioning infrastructure for a productive economy. He also noted that revising current credit rules could help mobilize more funding, suggesting that relaxing the debt brake would not impede the decline of the government debt ratio. Preliminary figures from the Sweden Statistics Office show that the country's economy entered a technical recession in the third quarter of 2024. Sweden's gross domestic product fell by 0.1% compared to the previous quarter. GDP also declined in the second quarter, marking 2 consecutive quarters of contraction, which defines a recession. Year-on-year, GDP was down 0.1% as well. In the United Kingdom, data from the British retail consortium has shown that prices in British shops fell at the fastest pace in more than 3 years this month. Consortium data showed that annual shop price deflation dropped to 0.8% in the 12 months to October, its weakest since August 2021. This also marks a bigger fall than September's 0.6% decline. This is the 8th time in 9 months that the rate of price growth has slowed. Food prices increased by 1.9%, while non-food items continued to experience deflation at 2.1%. Britain's Finance Minister Rachel Reeves will announce billions of pounds in funding for the National Health Service in the Wednesday's new budget. The funding will go towards buying new equipment for hospitals and increasing the number of operations. Prime Minister Keir Starmer has said that tax rises will be necessary to rebuild Britain's public services and has pledged that there will be no return to austerity. The Finance Ministry said there would be $1.95 billion for new surgical hubs and scanners and $90.8 million for radiotherapy machines. Chancellor Rachel Reeves is set to deliver the Labour's first budget in almost 15 years. She has recently announced plans to revise the government's self-imposed borrowing rules. So what are the key things to watch out for the autumn 2024 budget?
On October 30, Chancellor Rachel Reeves will present the United Kingdom's autumn budget, her first as the country's first female chancellor. The budget is set against the backdrop of steady economic recovery, with the UK economy showing growth in early 2024. Inflation, which hit highs in recent years, has slowed to around 1.7% year-on-year in September 2024, providing some relief to household budgets. So, what should we expect? Potential interest rate cuts from the Bank of England could help ease mortgage and loan pressures, while Reeves' new investment strategy aims to lift wages and support the private sector. The Labour government is prioritising economic growth, aiming to sustain GDP growth by partnering with the private sector. Investment is a key theme, with the government planning to expand public spending and infrastructure projects to bolster long-term productivity. However, Chancellor Reeves faces tight fiscal constraints, limiting her options for raising taxes or borrowing. Interest rates, currently at 5%, are anticipated to fall, potentially further stimulating the economy. The Office for Budget Responsibility will release new economic forecasts alongside the budget, which will shape expectations for growth, borrowing, and the UK's economic outlook.
So you do work on skills here?
Joining us today to discuss the upcoming United Kingdom budget and its anticipated impacts is Dr. Tariq El-Rifai. Dr. Tariq, thank you for joining us. Welcome to the Economic Bulletin. First off, how realistic do you think are the government's growth rates, and what specific measures should we expect to see that would help achieve these goals?
Well, first of all, I think the UK economy as it stands right now, the growth rate is very weak. They had a negative growth earlier in the previous quarter, and now it's growing at less than 1%. So I think the current Labour Party has its work cut out for it. Their current budget, by the fact of raising taxes is negative for economic growth. So I think they have a big challenge ahead of them.
Now, Chancellor Reeves previously stressed the need to raise large taxes or increase borrowing. How might these decisions influence the balance of spending in the budget?
It looks like so far, and what I like about the current government of the UK is that they're trying to be very transparent in their plans, because the Labour Party has not been in power for 14 years. So I think investors, consumers, citizens, they all want to make sure that what the plans are projected are very clear. So far, this has been very positive. However, whenever we're talking about whether we go to austerity, which is increasing debt and trying to enhance other economic programs, or raise taxes, I think the balance so far looks like they're looking more towards raising taxes instead of borrowing more, because borrowing more has been the problem over the past few years.
Now, regarding the private sector, how will investment in infrastructure and public spending impact the private sector growth?
Infrastructure investment is always positive for the economy. So whenever we see big infrastructure projects, this is always positive for the economy, because it not only creates jobs, but it has a trickle-down effect on the rest of the economic sectors, from housing to consumer spending to consumer confidence, etc. So infrastructure investment, obviously, I think is very positive.
Now, regarding the anticipated rate cut that the Bank of England will do, how significant is this for consumer confidence and spending?
When we saw their interest rates rise, we saw interest rates rise at a fast rate. This, of course, had a direct effect on the housing market in the UK, which, of course, is a major sector for the UK economy. Now that rates are coming down, of course, they're coming down slowly, which I think is positive. Whenever we see rates come down quickly, that's a negative sign for the economy. That means the central bank is concerned about growth and the outlook for the economy. So by coming down slowly, that's positive. We will not see the effects of this lower interest rates for at least 1 year by the time it circles through the economy.
Now, Dr. Tariq, looking at the wider picture, can we see an impact on global economy or markets after the finalization of the autumn budget?
There will be an effect on the market. Of course, all of these, I would say, policy or economic policy or government announcement, they'll have a temporary effect. So, of course, we will know what the markets think of the UK Finance Ministry's plan of the budget. Obviously, if it's positive, you'll see a positive effect on the market. If it's negative, you'll see a negative effect. However, these effects, I think, will be temporary. The market will take its time to continue its current projection or direction. However, if you want to get an indication of what the market thinks of the UK plan, you will see the effects pretty quickly in the market.
Thank you so much, Dr. Tariq, for your insights. Thank you. Now we move to the MENA region. The Future Investment Initiative kicked off today at the King Abdulaziz International Conference Center in Riyadh and is expected to draw over 5,000 attendees and 500 speakers, including Egypt's Prime Minister Mustafa Madbouli. Governor of the Public Investment Fund, Yasser El-Rumyan, emphasized that the Future Investment Initiative has contributed to over $125 billion in deals since its launch. Richard Atiyah, CEO of the FII Institute, announced that this 8th edition will showcase international deals valued at $28 billion across various sectors, including food, cybersecurity, renewable energy, entertainment, sports, and tourism.
30%. Now our target is to bring it down to a range between 18.
Saudi Finance Minister Mohammed Al-Jad'an has announced that Saudi investments in Africa's private sector are expected to reach $25 billion over the next decade, with $5 billion currently in circulation. Speaking at the New Africa Summit in Riyadh, Al-Jad'an emphasized Africa's crucial role in addressing global challenges and the growing partnership between Saudi Arabia and the continent. Key initiatives include over $1 billion for the custodian of the Two Holy Mosques Development Initiative in Africa, a $5 billion commitment from the Saudi Development Fund for projects, and $10 billion allocated by the Saudi Export-Import Bank for financing over the same period. Turkish Finance Minister Mehmet Şimşek has indicated that inflation in Turkey is expected to continue its slowdown, asserting that the worst phase is over. He highlighted that monetary policy remains tight. Fiscal policy will be further tightened, and income policies will provide greater support. According to Şimşek's comments during a discussion at the 8th edition of the Saudi Future Investment Initiative Conference in Riyadh, achieving price stability is currently Turkey's highest priority. For the past 7 months, Turkey has kept the main interest rate at 50% as officials work to bring down inflation, which soared to 75% earlier this year. A report from Kuwait's Direct Investment Authority showed that the country attracted direct foreign investments totaling approximately $675 million from April 2023 to March 2024. These new investments have increased the cumulative total since the Kuwaiti Direct Investment Authority was established in January 2015 to about $5.55 billion as of March this year. The report indicated that these investments were generated by 95 licensed entities from 34 different countries, with a focus on the services sector, information technology, as well as oil and gas services, construction, and infrastructure. Morocco and France have signed investment agreements worth 10 billion euros aimed at strengthening their partnership in various fields such as defense, security, immigration, renewable energy, and education. This was during a ceremony chaired by King Mohammed VI and President Emmanuel Macron in Morocco. The agreements include the participation of French companies like Alstom in expanding the high-speed rail line between Tanja and Marrakesh, and a deal with Total Energies in the field of green hydrogen, enhancing Morocco's position in the renewable energy market. These agreements are considered a significant step towards developing Morocco's infrastructure and economy. In commodities, the United States has announced that it's seeking up to 3 million barrels of oil for the Strategic Petroleum Reserve, with delivery planned through May next year. This purchase may leave the government with limited funds for further acquisitions until Congress approves additional financing. The solicitation is for oil to be delivered to the Strategic Petroleum Reserve's Bryan Mound site in Texas between April and May 2025. This marks another step in replenishing the reserve after its largest sale ever in 2022, which involved 180 million barrels. In commodities, oil prices rose slightly amid the U.S. intention to purchase oil for the Strategic Petroleum Reserve. Brent crude futures climbed 1.32% to $72.36 a barrel. U.S. West Texas Intermediate crude was up 1.45% at $68.36 a barrel. Gold prices traded higher as investors await a series of key economic data. Spot gold was up 0.3% to $2,750.87 per ounce. U.S. gold futures gained 0.3% to $2,763.40. Global shares were mainly trading higher today as oil prices continue to sink and markets await U.S. elections developments. In the United States, S&P 500 was unchanged. The Dow Jones Industrial Average inched up less than 0.1%, and the Nasdaq Composite traded 0.1% higher. In Europe, France CAC 40 gained 0.4%, while Germany's DAX rose nearly 0.3%. Britain's FTSE 100 was unchanged. In Asia, Japan's benchmark Nikkei 225 added 0.8%. South Korea's Kospi added 0.2%. Hong Kong's Hang Seng edged up 0.5%, while the Shanghai Composite slipped 1.1%. That's all for now. Here's a roundup of today's key headlines. U.S. finalizes regulations to restrict American investments in China. United Kingdom to unveil billions for National Health Service in Wednesday's budget. Morocco and France signed €10 billion investment agreements. That's all for today's economic bulletin on Q News. Stay connected for more news and updates. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at Q News EG to stay informed. For real-time updates, connect with us on the UMS digital platform Watch It. Thank you so much for watching.